Anil Gupta from KEI Industries. So I'll give you a brief about the results of Q1. We achieved a net sales of 1,782.5 crore with a growth in net sales to 13.87%. EBITDA in this quarter is 186.6 crore and we have grown this EBITDA by 14.37%. EBITDA net sales margin is 10.47% against 10.42% in the same period last year. Profit after tax in this quarter is 121.39 crore. So the growth in the PAT is 17%. PAT net sales margin is 6.81%. Domestic institutional cable sale wires and cables is 538 crore in the first quarter. So it is grown by 14%. Export sales achieved in this quarter is 307 crore against rupees 247 crore last year. So it has grown by around 25%. Domestic institutional cable sales of extra high voltage cable is rupees 50 crore in the first quarter against rupees 100 crore previous year. So the total cable institutional sale contribution is 46% against 49% in the previous year same period. Sales through distribution network, that is B2C, is rupees 796 crore in my first quarter against 652 crore in the same period last year. Growth is approximately 22%. The B2C sale has contributed approximately 45% in the first quarter against 42% in the last year. Sale of EPC division is 111 crore against 84 crore last year. Sales of stainless steel wire division is 58 crore against 61 crore last year. Volume increase in the cable division on the basis of consumption of metal in Q1 of FY23-24 as compared to previous year same period is approximately 22%. Pending orders as on 26 July 23 is 3,567 crore. External rating. The company has got a external India Rating and Research Private Limited has affirmed its long-term rating as AA with positive outlook. ICRA and CARE long-term rating is AA stable. Short-term rating from India Ratings, ICRA and CARE is A1+. Book value of the equity share of the company is 300.86 as on 30th June. Total borrowing is rupees 130 crore. This is only for channel finance. Otherwise, all other limit utilization is nil. Cash and bank balances of the company on 30th June is 306 crore as against total borrowing of 135 crore for channel finance, and cash and bank acceptance creditors as on 30th June is rupees 151 crore against 219 crore as on 31st March 2023.
So company is in the net cash position. Company is in the net cash position.
So the net cash is 24 crore as on 30th June against net cash of 183 crore as on 31st March. The finance cost has decreased to 8.94 crore against rupees 9.23 crore last year. Interest income on fixed deposit in Q1 is rupees 5.92 crore, which is included in the other income. It was rupees 1.44 crore in the previous year same period. Future outlook of the company. At present, company has repaid all its debts and is a debt-free company. Whatever cash accruals will be there, it will be used for capex for future growth and additional working capital requirements. Capacity utilized during. I'll give you the company company is confident of increasing its top line by 16 to 17% in the current financial year. During the year, the company has incurred a capital expenditure of approximately rupees 114 crore in the Q1, and during the current financial year, doing a brownfield capex of around 45 crore in Silvassa plant, which will generate an additional top line revenue of LT power cables of rupees around 500 crore. This will enable us to grow by approximately 16 to 17% in the current financial year. Apart from brownfield capex, in FY23-24, company has planned rupees 250 to 300 crore capex on greenfield expansion for cable and wires in Gujarat. Commercial production of which will commence by fourth quarter of FY25. We have already purchased land in Q1, and we will spend every year in capital expenditure of approximately 300 to 350 crore rupees each year for next 3 years to maintain a CAGR of 15 to 16% per annum, as against achieved CAGR of 14% during last 15 years. Industry outlook. As said earlier, the demand for our products is strong in domestic as well as overseas markets. India has emerged as the fastest growing major economy in the world and expected to be in the top 3 economies in the world in next 10 to 15 years. Demand in the infrastructure sector, in the solar, wind, and other infra projects of the central government as well as industrial projects by the private capex is very strong. Demand for residential properties has surged due to increased urbanization and rising household income. Increasing private and government investments in energy-intensive industries such as iron, steel, aluminium, cement, fertilizer, and refineries. The government emphasis on infrastructure development and projects such as energy, railways, and metro constructions, roads and highway building, ports and airports, and modernization, among others. So, thank you for your participation, and we'll now invite you to ask any questions which you may have, and we'll be glad to answer. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Mr. Piyush Khandelwal from Bank of India. Please go ahead.
Hi, thanks for the opportunity. So I just wanted to understand, let's say at current capacity...
I'm sorry to interrupt you, Mr. Piyush. Sir, your voice is very soft, sir. Could you speak a little louder?
Hello, can you hear me loudly now?
Yes, sir.
Yeah, so, thanks for the opportunity. So I just wanted to understand, let's say at current capacity, what can be the peak revenue that you can do?
In the current capacity as well as with the brownfield capacity which we are going for the next year, we can generate a revenue of 9,400 to 9,500 crore.
So you'll be able to take care of the growth. That's what I wanted to understand.
Yes. So that's why Anilji has said that the next year also we will grow by 16 to 17%. As well in the current year also we will be growing 16 to 17%.
All right, understood. The next question, if I look at the segment breakup in terms of growth, our domestic cables business has just grown 3% YOY. I mean, just wanted to understand because in the opening remarks as well, you mentioned that the demand is good. Then why that side of the business is not done well?
In the domestic side, if we talk of the low tension and high tension power cable, earlier our turnover was 472 crore last year. This year our first quarter turnover is 537 crore. So we have grown by close to 14% in the local market also. In the case of the dealer distributor, our growth is close to 22%, as Anilji has said.
So if I see Insti Cables business, that is around 588 crores versus let's say 572 crores in the previous quarter. It's a 3% growth. Because what
extra high voltage power cable, which was earlier 100 crore, is now 50 crore. But now order of position of extra high voltage power cable is very, very strong. So from the second quarter onwards, again this will go to 100 to 125 crore rupees per quarter. For extra high voltage power cable.
So you'll be able to do 550 crores of annualized sales in this EHV cable.
Yes.
Understood. Got it, sir. Thank you.
Thank you. We take the next question from the line of Mr. Rahul Agarwal from InCred Capital. Please go ahead.
Yeah, hi. Good afternoon, and thank you so much for the opportunity. So, sir, Anilji, one question to you. I mean, cable segment growth is at 14% YOY overall, everything put together. Was this in line with your internal planning for the quarter? Because it seems to be a low number when I look at your peer group who already reported numbers. Looks like cables are seeing some exponential demand in the country. So just needed some of your thoughts on this. I understand EHV is down for some order execution delays. If you can explain that as well. But what happened on the LT-HT side? Is it like material enough to think about market share loss here?
No. I'll explain you. We have grown actually by 22% in volume terms. Revenue growth is 20% because of the decline in the raw material prices and the metal prices of copper and aluminium, due to which the revenue growth is only 14%. But in quantitative terms, we have consumed 22% more raw material during this period. Now, your second thing is that we have not, we have some capacity constraints at the moment, so which we are doing a lot of debottlenecking process in our existing plants, so that we maintain a growth of around 16 to 17% revenue growth and around 20% in volumes this year also. And I'm assuring you that it will be done. It will happen.
And Rahulji, as per our earlier guidance also, we have already guided every time that we will be growing 16, 17, 18% kind of thing. And in volume terms, in volume terms, it has already grown by 22%. So our sale is as per the guidance actually, which we have given earlier also.
Yeah, absolutely agree, sir. I mean, the thing was actually most companies are beating guidance, given that there is some exponential demand scenario along the capex lines of the country, both private and public. Hence, I was thinking that in that context, it is low. I'm not saying, obviously, you've guided and you've met the expectation.
So, Rahulji, but I am not aware that the peer group has guided you about the 30% growth for full year.
No, they haven't. Yes. They have not.
Yeah. Because we always talk of the yearly growth, and since so many years, in the past, we always guided you and we achieved that.
Agree, sir. Moving on, sir, between the copper and aluminium mix, I just wanted to know for KEI in terms of raw material, should we assume equal mix between copper and aluminium?
Normally, it is a 55-45 kind of thing. Sometimes 60-40. It is like that.
Okay, get it. And one question on balance sheet. Your net working capital, it looks like it's up 250 crores on investment QOQ. The operating cash flow is negative for the quarter. Any thoughts what really happened?
No, that is mainly because of we have paid more to the creditors because the money is in the business only. Whenever we would like to have increased the creditors, that will be there available. Because right now the cash is available, so we are purchasing more and more on the cash. If you see, our creditors has gone down. See the trade payable figure.
Yeah, I understand that, sir. We have been doing that for.
It is in our hand actually. Whenever we want, we can increase. Whenever we don't want, that is there. So that's basically the cash flow is available with the company actually.
Okay, get it. So no major increase into inventories and debtors. Nothing unusual there, right? That's what I want.
No, debtor is already last year was 1387 crore. This year is 1322 crore. Because the EPC projects which we have already closed, we are getting our retention money. So debtor is slowly is decreasing actually. Even the sale has grown by 14%. Even the debtor is low as compared to last year.
Got it, sir. And lastly, on the capex, this brownfield of 45 crores, this is the second time we are doing this. Is that correct?
Yes. Yeah. First is already completed. And now the second is going on in the Silvassa, which will be completing by September. So the second half production capacity will be available. And another capex is going on in the Bhiwadi. And another is going on in the Gujarat. So that's why overall we have already invested in the land. And now we will invest in the plant machinery advances and the building for Gujarat and Bhiwadi. So approximately another 300 crore we will spend in this financial year. And for the next 2 consecutive years, every year we will investing close to 350 crore each year. So our growth target, whether for current year or for next financial year, we are keeping in our mind 16 to 17% kind of growth.
So there is a brownfield happening at Bhiwadi also?
Yes.
How much is the spend there?
It will complete by the first quarter of the next financial year. So it will take care for the next year 17% growth.
What is the capex there, sir?
Close to 110 crore rupees.
Okay. So if I understand this correctly, you spent about 114 crores this quarter. You will spend another 300 crores in the balance 9 months.
Yes.
And from next year onward, it will be 350 crores each.
Yes.
And this includes Bhiwadi capex also?
Yes.
Okay, perfect, sir. I'll come back in the queue. Thank you so much. All the best.
Thank you, Rahul.
Thank you, sir. We take the next question from the line of Mr. Shubham Agarwal from Axis Capital. Please go ahead.
Yeah, hi, sir. I think most of my questions got answered during the last interaction with the last participant. Just on the capacity itself, what is the capacity utilization right now for you?
So close to 90% capacity we are utilizing in our low tension and power cable capacity. And since our Silvassa plant in our houseware capacity we have already increased, so that capacity utilization is close to 63-64% now. In our extra high voltage power cable capacity from the current quarter, it will be touching close to again 90 to 95% now.
Right. And this new capacity in Silvassa is LT-HT. I heard it right?
It is only for LT cable. In our Silvassa, which is the brownfield capex is going on, it is only for LT power cable.
Okay. And so can you just give me some detail on the pending order book, the breakup that you gave?
Pending order book, as Anandji has said, that is 3,567 crore rupees, which includes the EPC pending order is 832 crore rupees. Extra high voltage power cable is close to 809 crore rupees. And the domestic cable for low tension and high tension is close to 1,690 crore rupees. And export order is 236 crore rupees for the cable. So put together all, it is 3,567 crore rupees.
Okay. That's all from my side, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Mr. Achal Lohade from JM Financial. Please go ahead, sir.
Yeah, thank you for the opportunity. Sir, I just wanted to check on the margins. If you look at the margins for the cables in terms of the EBIT margin, we see that it has contracted on a YOY as well as QOQ. The dip is not large, but given we are, we have capacity constraint, which implies that we are utilized fully. Why would the margin contract? Is it to do with the raw material? Is it to do with the product mix? Or is there...
No, it is mainly because of the advertisement and IPL expenditure during the first quarter. Only because of that only. Nothing else.
Will you be able to quantify what is the quantum?
Close to 10 to 12 crore we spent on the advertisement and the IPL, which was not in the last year quarter.
Understood. So this is obviously the accounting.
Actually, all the expenditure we were relating to the quarter one only, so we have to book in the same quarter actually.
And how do we look at the spending from a full year perspective? What is the spending we would look at in terms of percentage? Or
No, actually, the other expenditure on business promotion advertisement will remain same as we were doing in every quarter. Last year, we did not participate in the IPL and we did not done the TV advertisement for IPL. So because of that, additional 10 crore was the expenditure in this quarter. Otherwise, overall business promotion advertisement overall year-on-year basis, it will be close to 35 crore rupees.
Annually. Okay. Understood. And secondly, can you talk a bit more on the exports? Which geographies have we got more, customers now signed up in terms of the margins for these export, and what are these, what is the mix in terms of export, in terms of wires, cables, and within cables, if there is LT, HT, etc.?
See, as Anilji has earlier also guided this year, that last year our export was contributing close to 10%. So he has vision this export within 2-3 years time to go to the level of 70 to 20%. So in the current financial year, we are targeting a 17% kind of total contribution from the exports. So even in this quarter also, if you see, the contribution from export has reached to 17% in the current financial year also. So, right. And the export order book position is strong. It is 236 crore rupees export. And we are exporting mainly the cable part, low tension, high tension, and little bit extra high voltage power cable.
Right. And just a clarification in terms of the execution period, what is the typical period for the domestic cables as well as for these exports? Is it 3 months?
Yeah, it is normally 2.5 to 3 months.
2.5 to 3 months from the getting the order to the delivery.
Yeah. So whatever pending order is there, we have to supply within 3 months almost.
Got it, sir. This is very helpful. I'll come back in the queue, sir. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Mr. Venkatesh Balasubramaniam from Axis Capital. Please go ahead, sir.
Yeah, thank you for the opportunity. Now, I had a few questions. The first question is on copper. Now, can you please highlight how much percentage of the copper that you use you procure from India and how much you import?
So normally major copper and aluminium is we are using domestic only against the advanced license. Few orders we take from the import side. Otherwise, most of the cases there are the validation. So we take even the duty free from the domestic supplier. That is Hindalco and Vedanta, etc.
Okay. So, because the reason I'm asking you this question is primarily because the market leader actually claims that when you go to the if you import copper, there are contracts available where, let's say, you place the order for copper today, the price doesn't have to be decided on that day. Let's say you will take the delivery of the copper after 3 months. You have the option of deciding how you want to price the copper, whether it be at spot, or let's say if the prices have actually risen over the 3-month period, you can take the average price. So are these kind of contracts available in the international market, first of all? And secondly, why is somebody like KEI not participating in the international market if these kind of contracts are available?
Still, these type of contracts are available, but we can definitely do the copper LME pricing on a forward note when the actual delivery is taking place. But ultimately, it is a call which we have to take. What kind of risk it carries, we do not know. Why we are not playing blind. We do the forward booking only in case we have a forward contract on firm prices, so that our actual supplies matches with the prevailing copper prices at that time.
Okay. Thank you. That is very helpful. The second thing is, couple of years back, there were talks about, you had mentioned that you were evaluating an entry into the FMEG business. But I guess, I don't know, is there any thought process on that? Because it doesn't look like FMEG is that great a business now, with almost everybody entering the business. So have you completely scrapped plans on the FMEG entry? or is it like you still have a thought process that you will enter that business?
We have no plans to enter that business.
Okay. Thank you very much. And one last question from my side. Obviously, some of your peers, like somebody like Havells, who's more wires heavy, has grown at around 25%. Polycab, who's cable heavy, has grown at 40%. And we have grown at a lesser pace. Is it basically only because of the capacity constraint that you are already operating at almost 90% utilization? That is why you couldn't grow. Was there a possibility that if you had that capacity, you could have also grown at, let's say, 25-30%? Is the demand environment that strong?
Yes, you are right. Demand environment is strong, and it is only the capacity constraint due to which we have grown lesser.
Okay. If I could just ask one more, pardon me for it. Some of your competitors have started talking about China plus one in wires and cables. That, a country like US wants to diversify our supply chains in terms of buying wires and cables. Are you facing are you getting queries from international clients that can you please export to us? Because we want to buy less from China. So this is something some of your competitors are actually highlighting.
Yes, you are correct. We are also getting lots of inquiries, and in the coming quarters and months and years, the export will grow substantially. We have also started exports to USA since February this year, and quarter after quarter, you will see our export has jumped to 17% of our sales, which was in earlier years it was only 10%. So it will definitely be growing, subject to whenever we are able to feed them with our capacity.
Okay. How does the export margin compare with the domestic margin? Is it higher, lower, same?
It is almost 1% higher.
1% higher. Okay. Thank you. All the very best for the future.
Thank you.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. We take the next question from the line of Mr. Praveen Sahai from Prabhudas Lilladher. Please go ahead.
Yeah, thank you for taking my question. So related to the export only, as there is a good growth we had seen for a quarter, you are guiding also for a 17% contribution for this year. Is it because largely of a geographical expansion, or you are seeing in the existing locations there is a growth is coming in?
No, it is coming from existing customers in existing countries also, and also from newer territories also. But the traction is definitely strong for the cable products from international markets.
So as you also highlighted in the export that the US in the last call also you had said that the US approval, everything is done. How much is the US contributing right now in the export?
So that figure-wise we cannot disclose country-wise, but as a overall it is strong.
And one clarification, sir, related to your capex. So 2 of the brownfield expansion capex for this year is lined up, or for the next year?
Actually, Silvassa was doing earlier also. So in the last year we invested around 50 crore in Silvassa, and this year we are again investing 45 crore in Silvassa plant. And in our Bhiwadi plant we will be investing around 100 to 110 crore rupees. And then for Ahmedabad, Gujarat, we are investing in the greenfield project. So overall, the current year close to 400 crore we will be investing, put together all, whether it is Ahmedabad or it is Bhiwadi or it is Silvassa.
Okay, and one more clarification on the greenfield. Last quarter you said it will be operational by Q3 FY25. Now it's delayed by what quarter?
It will be operational by Q3 end actually. So the 4th quarter sale we will be started getting from there.
Okay. Thank you, sir. Thank you for taking my questions.
Thank you, sir. The next question is from the line of Mr. Sandesh from HSBC. Please go ahead.
Hello.
Yes.
Hello, good afternoon, sir, and thank you for the opportunity. Sir, I wanted to ask you regarding to the timelines of the capex. So the Silvassa will be done by September, right?
Yes.
And the another brownfield expansion will be done by Q4 of this year.
By the first quarter of the next financial year.
Q1 FY25.
Yes. And the Gujarat, the first phase will be completed by the sale will start from the fourth quarter
of next year.
Of the next year.
Okay. And sir, on the EHV side, sir, are we confident of reaching revenues of 500 to 600 crores this year? Would that be a reasonable?
So from this quarter onwards, you will see that there is we will cover up the deficit of first quarter also in this quarter.
Okay. And sir, one last question from my side. Sir, there has been a slight receivable improvement this quarter. So is it sustainable or should we see?
Receivable will be in the same range. As I earlier said, because of the change in the mix of the houseware, the retail dealer distribution division will be contributing in the current financial year close to 46-47%. So because of that, last year our receivable has reached to 2.5 months, and the current financial year it will be holding will be close to 2.2 months.
Okay, sir. Thank you, sir. And sir, one last thing.
In last 3-4 years, if you see continuously, it from 3.85 months to 2.9 months, from 2.9 it has come down to 2.4 months. Now it will be closing 2.2 months actually.
Okay. And sir, one last thing, if I may.
To interrupt you, Mr. Sandesh, may we request you to join the question queue, sir?
No, he's asking, please continue.
Thank you, sir. Sir, one thing on the margins, you mentioned that there has been a slight higher A&P spend this quarter, and it would normalize in the subsequent quarter. So, can we expect a margin expansion in line with Q4 for the rest of the year?
Yes, definitely.
Okay. Thank you, sir. Thank you. That was it from my side. Thank you once again.
Thank you. A reminder to all the participants to please limit your question to 2 per participant. So we take the next question from the line of Amit Mahawar from UBS. Please go ahead, sir.
Thank you. Sir, my question is for Anilji. So this year, FY24, what kind of volume growth do you see for the industry in HT-LT cable?
As of now, I expect close to 20% volume growth overall for us. For industry, I don't have the figures at the moment, but we can provide you an estimation. It will be only an estimation.
Sure. Fair point. Very helpful. And second thing is, FY24 has started on a very strong note. We saw all the peers in volume growth. In cables reporting very strong volume growth. It also tells us that a lot of states are, inviting supply tenders, right? We've seen a lot of states where some of our peers have supplied very large quantity. Do you think, in your assessment and understanding, this year it's going to be a very heavy first half and relatively slower second half, considering we are going to also enter the election period? Is it right to say for cable and wire?
No. I think the year will be good and strong, even in H1 and H2 all. And I think overall it will remain a good period.
Fair point. Thank you. And maybe last question for Rajiv ji, sir. What's the target, by next year for debt levels and interest cost of sales that you're targeting? Thank you.
Amitji, as we earlier said, that debt level we will be maintaining as a debt-free company now from here onwards. So debt will not be there. Because of that, we are having a disciplinary approach wherein we are maintaining a growth target of 16 to 17%. Accordingly, whatever internal accrual we are generating, we are investing into the capital expenditure as well as keeping for working capital requirement. So to maintain certain kind of discipline and the capital allocation, the same kind of growth we are targeting for next 5 years or next 10 years as a debt-free company.
Okay. Thank you, sir, and good luck.
Thank you, Amitji.
Thank you, sir. The next question is from the line of Akshay Kothari from Envision Capital. Please go ahead, sir.
Yeah, thanks for the opportunity. So just wanted to know regarding the earlier participant's question, if we are seeing a very good demand on the, very good demand tailwind on cables, wires, and everything is going good, then why not go for that forward contract LME? Because in that case, we won't be playing blind because we are actually seeing a lot of tailwinds across the sectors.
In the past also, as we have earlier communicated, that we don't run the treasury, number one.
Okay.
Whatever natural hedge is available to us, we are having a 3 to 4 months kind of pending order book position, and we are having 2.5 months to close to inventory in our shop floor. So it is under natural hedge. Only in the case of the contract from the customer, which is the longer period, only against that only we do forward contract, otherwise we don't do. So that's why neither we lose, neither we gain from the copper purchasing.
Okay. And sir, we are also planning a capex on the EHV side, right?
Yes, in the new greenfield project.
Okay. Yeah, that's it from my side. Thanks a lot.
Thank you.
Thank you, sir. The next question is from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Hi, sir. Thank you for the opportunity. So this is regarding one of the earlier participants' questions. So you said that in this quarter there has been a higher ad spend of about 10 to 12 crores. So even if I add back that number to your EBIT, your margin expansion only improves to 50 basis points. I just want to understand, so is it fair to understand that most of the expansion was let go because you had to take a price reduction?
Price reduction? Repeat your question. We are not able to understand.
So if I do not consider the higher ad expenses in this quarter, which you said you incurred of about 10 to 12 crores, I mean your margins would definitely expand, but probably from 9% to say 9.5 to maybe 9.7%, whereas the peers have shown a very strong growth in terms of margin. So I just want to understand, is it because we had to, the raw material pricing softened and that's where we took the hit?
No, it is not like that. In the earlier also, in the houseware product, our margin is 11%, their margin is 14-15%. We have earlier also communicated. So our margin is 10.5 to 11%. So we will be maintaining that kind of margin in our balance sheet level.
All right. Okay.
As far as advertisement is concerned, the normal advertising will continue. It is only the IPL expenditure which we incurred in the first quarter may not be there in the subsequent quarters.
All right. Understood. And so my second question is more on a longer term basis. So we hear the infrastructure development that's going on, and then there is a decadal tailwind in the cable sector. And the infrastructure is not something that's going to end in 1 year. It's a multi-year project that the government and private capex, etc., is going to be done. So understanding from a 3 to 5 years perspective, given 2020 FY24 start was very strong, how do you see midterm? Next 3 to 5 years, the demand, is it going to remain as strong? How do you see it?
Definitely demand will be as strong, and just in the last 15 years, KEI has grown at a CAGR level of 14%. In the next 10 years, we are planning to grow by 17% CAGR because now we are a debt-free company. So we are talking of a longer term perspective, not for 1 year, but for 5 to 10 year basis, that we will grow by 17% CAGR.
Understood, sir. Okay. So those are my only two questions. Thank you.
Thank you. We take the next question from the line of Mr. Prashant Kothari from Pictet Asset Management. Please go ahead.
Yes, sir. Thank you for the opportunity. I just had this question on the capacity. Like, you're constrained for the capacity today. Does it mean that you have the ability to maybe prioritize your customers better, and therefore kind of retain more higher margin business. I just want to understand how you are kind of thinking about it, how you are prioritizing which clients to kind of supply to, or which dealers to supply to, and which dealers not to.
Sir, we are among the second largest company in the country, so we cannot deny to our old customers. So we have to maintain the relation with all our customers. So we cannot choose and pick only for higher margin, because business has to go for longer period. So it is not the case. The case is that we are serving our customer. We are having the patronage from our old customers, and we will be maintaining that. EBITDA margin we will be maintaining, as we said, 10.5 to close to 11%. Definitely we will be reaching, and that is our goal also, to reach 11% EBITDA margin with a growth rate of 17% kind of CAGR. Accordingly, the capital which we are earning, which we are allocating.
Okay. And just in terms of future capacity planning, sir, how do you think about kind of having more spare capacity than what you have today? Like, what is the downside if you are to invest, let's say, rather than 300-400 crores a year, if you are to invest maybe a bit more?
Sir, you see, we cannot see that only in a 1 year, if a competitor has increased, we should chase them, because then the accident will happen. In the past also, in the last 14 years, whether it is a competitor or it is a KEI, all have grown 14 to 15% CAGR. We know that in future also we may grow by 17%. So CAGR level, the difference is much higher, boss. We are talking for the 10 years.
Sure. All right, sir. Okay, thank you much.
Thank you, sir. The next question is from the line of Ms. Sangeeta from Cogito Inclusive. Please go ahead.
Yeah, hi. Good afternoon, and thank you for the opportunity. So I wanted a little more color on your margin. We have talked in the past also and said that, one of the reasons you gave why the margins had not grown despite the growth in sales was that you were reinvesting in advertising, etc. But now that business has also grown a lot, when can we start beginning to see a meaningful expansion in the margins? Because if I look at my last 5-6 years, we've been very stable around this 10.5% level. Is it possible to take that at like a notch higher?
We earlier also spoke about that when our capacity will increase from the new greenfield projects and in the existing brownfield capex, our EBITDA margin will expand by 1.5%. So within next, but it will be next 3 years kind of thing. Because one capacity, when this greenfield capex will be there, so due to economy of scale, where the marketing expenditure and the head office expenditure will not increase to that extent. So one EBITDA expansion will be from their side. And another, we are bridging the gap of our houseware price versus our peer prices within next 2 to 3 years time. So because of these two reasons, our EBITDA expansion will be 1.5% in next 2 to 3 years time.
Okay, so over 3 years, so roughly 50 basis points a year kind of thing, is that what we should expect?
For current year and for next year, it will be 11% range. But after that, it will start increasing, because the commercial production in the greenfield project will start only in the next financial year.
Okay, all right. Thank you, sir.
Thank you. The next question is from the line of Mr. Anupam from SEBI Life. Please go ahead, sir.
Hi, sir. So my question is again on the margin side, but can we say earlier we have seen a margin of like 12.5%. What sort of environment will that provide that? Because at some point our ad expense will also stabilize, and as well as we'll get some operating leverage. So shall we expect from FY25 a good growth in margins?
FY25-26 financial year, we may reach to 12%.
Okay.
We are very, very transparent with all our investors, all our bankers, that whatever we are doing, we are communicating. So there is no surprises in the negative side or positive side. We always communicate to all of you well in advance.
Okay. Because given that we are also increasing in our export as well as EHV, so the margins are sort of looking like to improve from here.
But in the industrial side, we have to maintain the quality while we are doing exports. We are dealing with the institutional sales. Since we are doing the institutional sales, please appreciate in each and every institution, all the sale goes through the inspection process only. We are not a 75% selling to the dealer distributor, wherein no inspection agencies are there. So any company can sell anything. So we are selling in an institution side where all the inspection clauses are available. All the companies are appointing the inspection agencies to our company. So the quality of products is all at an international level, which the KI is giving to all our customers.
Okay, sir. And sir, what is our margin difference in retail and institution sales?
Like in the retail is close to 11%, and the institutional sale is close to 10 to 10.5%.
Okay. Thank you, sir. I'll join back in the queue.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to one per participant. We take the next question from the line of Mr. Venkatesh Balasubramaniam from Axis Capital. Please go ahead, sir.
Yeah, thanks once again for this opportunity. I just had a follow-up question. Now, I am aware that historically, KEI, a very long time back, used to have leverage problems. But over time, you've done fantastically. You've executed very nicely. You have reduced working capital. You have reduced debt. Now you are at almost net cash. Now, one participant earlier asked that, why not do more capex, for which you had replied that, over longer term, the growth is 14-15% only. So we should target that kind of growth only. But you are also aware of the fact that this China Plus One is a new opportunity which is coming up. And normally when a country like US or large countries move supply chains to a different country, it is not a one-time opportunity. It could be an opportunity for the next decade. So is there any merit to go back to the drawing board and perhaps do double the capex than what you are doing, maybe even borrow for it, and maybe have slightly higher leverage over the shorter term? Because you might actually miss out on a large opportunity if you don't do the necessary capex. So is there any... Yeah.
Sir, we will not miss out anything. The longer term sustainable growth for any company, please note my words, will be 16 to 17%. That is, I am talking for the next 10 years. So we are not planning for 1 year. We are planning for the next 10 years. And we are raising our CAGR growth from 14% to 17% now on a sustainable basis for next 10 years. We will be running a debt-free company, that is for sure. So neither we will borrow and we will be maintaining a 17% CAGR. We are very, very transparent to all of you.
Okay. Thank you very much, sir. All the very best. Thank you.
Thank you very much, sir. Thank you, Deshi.
Thank you, sir. The next question is from the line of Mr. Rahul Agarwal from InCred Capital. Please go ahead.
Yeah, thank you for the follow-up. Rajiv ji, one question on creditors. Just trying to understand that better. I know the company strategy in terms of reducing payables, so I know that. What I'm trying to calculate is, when I look at March balance sheet and June balance sheet, the creditor balance is down about 160 crores. Is that correct?
Yes, sir.
So you're saying that because we did this repayment...
Rahul ji, creditors का क्या होता है? Whenever we have the extra cash, we buy the material on cash, prefer to buy on cash, because where we utilize the money. Either in fixed deposit, because we don't run the treasury, so we don't invest anywhere, we don't invest in capital market as a company. So we want to remain within the business. Now we are going for capital expenditure. So whatever money we are generating, it will be putting only there. So creditors में क्या होता है कि जब चाहो आप बढ़ा लो, जब चाहो घटा दो आप. अगर जरूरत है पैसे की तो बढ़ा दो, बट लेकिन डेट नहीं बढ़ेगा लेकिन कंपनी.
Sir, I understand that. My question was, can we quantify the savings we have done on this 160 crores?
No, saving is only if we are opening the letter of credit, it is interest bearing. If we are not opening DLC, then it is a non-interest bearing. So if the 14% growth is there or 16-17% growth we are going to do, but interest cost is not increasing. Otherwise, the interest cost will increase, no?
Yeah, I understand that. Okay, no problem. I'll take it offline.
This is directly in proportion to that only.
I understand that, sir. Because I was looking at the acceptances number, it has gone down by 70 crores QOQ.
Thank you. Yes.
So is there a linkage between the difference of creditors being repaid and acceptances going down?
No linkage, sir. It is a simple case study because copper and aluminium always purchasing on cash. So if we are having the cash extra, we are paying them directly. If we are having sometimes going for letter of credit, but if the import is increasing, then definitely we have to open the letter of credit because in the import we need to open the letter of credit.
Understand that, sir. And just last question on again.
Thank you, sir. May we request you to join the question queue?
Okay, I'll come back. Thanks.
Thank you. We take the next question from the line of Mr. Raj Shah from Ambit Capital. Please go ahead, sir.
So just one question on the capacity again. So I just wanted to understand that if in the short term we have a capacity constraint, so is there any possibility of outsourcing for the incremental growth that we get?
To maintain the quality of the cable, we need to manufacture in our company. So, but again, as of we earlier said also, whenever we have planned for growth of 16-17%, so it is a well-defined process we have already communicated to you as well as communicated to in our company, internal board also. So the same way we are growing 16-17%. It is not the case somebody is having more growth, we should jump into that, we should not do that. We know our strength and we know what quality of products we need to produce and supply, whether in the domestic market or in the export market. So accordingly and ethically, we are doing our business.
Okay, sir. And just one additional question. So if I just look at the margins of the market leader over the last 10 years, so then we have gone from around 9% to roughly 14.5% for FY23-24, while we have maintained margins at around 10 to 11%. So just wanted to understand, so going forward, what are we spending more on branding? What are we doing differently on the branding and advertising part? So that we can reach, as we reach a good, decent scale, we can also reach margins comparable to this.
So we are not competing with anybody. We are competing only with ourselves. As we said, our margin in 25, 26, 26, 27 will reach to 12.5%. So we are not guiding that we will be catching up the peer growth or something else. We will be growing with a 17% kind of thing for a CAGR growth, having EBITDA margin is close to 11% right now, which will be reaching within 3 years' time 12.5%, and we will be running a debt-free company. So these three things we are maintaining.
Okay, thanks a lot.
Before we move on to the next question, a reminder to all the participants to please limit your question to one per participant. The next question is from the line of Neerav Vasa from Anand Rathi. Please go ahead.
Hello, sir, and thank you very much for the opportunity. So at end FY22, our installed capacity across all the multiple cable options that we have was 14.95 lakh kilometers. Would it be possible for you to share what is that number currently and what can that be number end of this year and end FY25? Thank you.
Sir, this I will communicate. Right now I am not having the kilometer number. In my presentation you will see, which will be in the website by evening. So we are already disclosing the capacity in our every presentation.
Thank you, sir.
Thank you. Next question is from the line of Mr. Siddharth Purohit from InvestQ Investments. Please go ahead.
Yeah. Hi, sir. Sir, any bifurcation you provide how much of business normally we get from government related projects and how much from non-government? and particularly from railway side?
Sir, in see, we don't have that kind of number, but we are having a segment type of number wherein the institutional business for low tension, high tension power cable contributing 30% of our total sales. Dealer distributor business is contributing 45% of our total business, and export is contributing around 17% of our total business. Because the institutional business includes not only railways, metro rail projects, EPC contractors, because when the L&T is giving the order, we don't know whether it is a distribution and transmission order, or it's a metro rail project order, or it is any refinery order, or it's any railway project order. So we supply lots of cables to these EPC contractors like L&T, Siemens, ABB like companies, large companies.
Okay. The reason I was asking is that there are very few large companies like yours, and the government is on a massive expansion mode both on railways as well as non-railways. So
you are seeing the government expansion now. We are always telling you since last 3 years the demand is good. But since the capital allocation basis and the capital availability to us, we are in a mode wherein we will grow 17-18% kind of growth.
Okay. Okay, sir. Yeah. Thank you.
Thank you, sir. We'll take the next question from the line of Drashti from ThinkWise Wealth Managers. Please go ahead.
Thanks for the opportunity, sir. When you say that you are foreseeing a growth of 16 to 17% for the period of next 10 years, is there any particular segment that you see this growth with, or skewed towards one particular segment, or this is going to be a broad-based number that you are projecting?
Madam, nobody can predict like this. Actually, we are running a complete profile portfolio like you. So we are having low tension, high tension, extra high voltage power cable. We are having wire, and we are having the segment like we are supplying to institution, supplying to export market. So product and segment. No one can know that which of the product will be higher, which of the product will be lower like you. So as a whole, we will be growing like this.
Thank you. We take the next question from the line of Ritika Gupta, an individual investor. Please go ahead.
Hi, sir. I just had one question. I wanted to know that you're bullish. Which is the geography that you're most bullish on? US market we started in February. So what percentage of our exports are going to the US market?
Close to 10% of the, or maybe more, because I cannot disclose those numbers actually to you for a country-wise actually.
Okay.
Yeah.
But which geography are you most bullish on?
You see, we are in the geography of Africa, in the Middle East, Australia, US. These are the major geographies wherein we are operating.
Okay. And you see mainly growth coming from?
The growth is coming from every sector, everywhere. It is not the case that the Middle East is not growing, or Australia is not growing, or Africa is not growing.
No, but if I had to ask you for FY24.
US we have added because of that. Our CMD sir has already increased the contribution target from 10% to 17% actually.
Okay, that is the reason.
Yeah.
All right. Thank you.
Thank you. The next question is from the line of Mr. Rahul Agarwal from InCred Capital. Please go ahead, sir.
Sir, thank you. This is my last question. So just one question on channel finance. The 130 crore number, if I understand this correctly, this is a recourse debt which is basically related to your dealers who have taken channel finance. Is that correct?
Yes, you are right, sir.
So my understanding was, generally when I look at other balance sheets, typically this is shown as a contingent liability, right? It's not part of the balance sheet. So is there any difference in accounting policies, what you follow and other?
No, sir, everywhere accounting policy is same. The recourse level is also same. Sometimes AIC companies जो हैं वो अपना directly देते हैं recourse, दूसरे लोग indirectly देते हैं. सर फर्क इतना ही है. Otherwise banking channel is for everybody same.
Acha. Okay. Got it, sir. Got it. Thank you so much. All the best, sir.
Yes, sir.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Thank you very much, friends, for participation and listening to us. If you and having faith in us, if you still have any further questions, you can reach out to us. Thank you very much.
Thank you very much to all of you.
Thank you. On behalf of Monarch Networth Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.